Hello, this is Ahuro from OTET Markets. We'll be with you with a short outlook on global economy and the week ahead, which is going to be the 37th week of the year. As always, first let's check what we had last week and see what happened first in the last week, and then we can check and review what we're expecting from the week ahead. Let me bring the economic calendar of the last week. The last week, generally, the focus was mostly on two data, purchasing managers index from most developed and developing economies and US labor market numbers. On PMI data, Monday we had manufacturing PMI data on Monday and Tuesday, and then on Wednesday and Thursday we had service PMI data. On manufacturing data, generally, we had a little bit better than expected, both in Eurozone, China, in most of the economic zone. From China, for the first time in the last few months, the Chinese manufacturing PMI increased above 50 expansion level. In the Eurozone, it was much better than expected. In United States as well. On the other hand, the service sector, after several months of increasing a little bit, slow down its pace, and we could see a weaker, slower and weaker economic growth in the service sector, especially in the Eurozone, where we were expecting to have a little bit better, much better than that, thanks to Paris Olympic Games, but still the improvement was not in line with expectations. Before checking the US labor data, I have to say that the last week, the Canadian Central Bank also had a interest rate meeting, which they held, which they cut the interest rate by 25 basis points from 5% to 4.20. Here, just like to 4.50%. Sorry, from 4.50% to 4.25% with the 25 basis point rate cut that they had. The Canadian, it was well expected as the Canadian inflation was falling down. At the same time, the Canadian economy also had facing with the many struggles that caused the central bank in Canada to cut the rates before getting more late. In United States, we had the labor market data, and GLT showed that the opening, just like we had the job openings much lower than 8 million, almost 7,600,000, which shows that for each unemployed American, we have only one opportunity to get the job. But that shows that the labor data already cooled down and it's very tight right now to get the job. And finally, on Friday, where we had the NFP numbers, we saw that the unemployment rate fell to 4.2% from 4.3%, but total labor hiring increased only 142,000, which it was very lower than 164K expected. Generally, the data in the labor market shows that the labor market is a little bit slowing right now, continuing to slow down, and we cannot count too much on the labor data. That was the reason why the central bank and the Federal Reserve officials also emphasized that now our turn is, and means Federal Reserve focus turn to labor market compared to their priority of being inflation in last months. Now the priority for the central bank most probably will be the labor market, as the inflation already is falling down, and there is more reason that we can see the inflation slowly continue falling. Now the central bank trying to get the economy a little bit more supported, and most probably they will cut the rates by 25 basis points. As we're talking about cutting the rate, with this data that we had and with the expected inflation, which we are expecting to see on Wednesday, we expect to see the both CPI and core CPI to increase by 0.2% monthly, and on the annual scale, you can see the core CPI down, stay unchanged at 3.2%, and CPI falling from 4.9% to 4.6%. Generally, this data will not have a big surprise for us, and we can expect that 25 basis point rate cut, not 50 basis point rate cut, as it can be also very risky to cutting the rate at the first meeting with like 50 basis point. It can have a mini, but well, we can say that okay, it can be good for the stock market, but it can have many negative effect in the market as well. But at the same time, it can send a signal to the markets that wow, the economic condition is very bad, and that can cause the just like a negative environment in the market and a sell pressure compared to the opposite that totally it can give a totally opposite results than what the central bank is looking for. Even now, with this data, that we expect to see the higher rate cut, higher possibility for the rate cut, we could see that the stock market, they didn't get the benefit too much out of that because that's sending the sign of the weaker economy. For the week ahead, besides the CPI data from the United States, we have the CPI data from the China. We are expecting to see the inflation started increasing in the China as well after several months of falling. Last month also inflation increased. This month also we're expecting to see 0.5% inflation increasing in a monthly base, and in the annual base from the 0.5%, it can increase to 0.7%. Finally, the Chinese government and the central banks effort is going to pay off, and they can see finally the result of their support from the economy and spending. The people, they are slowly started to spending money. That can be a little bit the good news, but still we have the CPI numbers from the many of European economies. We have from the China, we have from Brazil, we have from the Mexico, and we have to watch out of that. We have to watch them as well. But the most important that on Tuesday will be British labor market data. We're expecting to see that unemployment rate to stay unchanged at 4.2% where it is right now, but the focus will be most probably on the earnings. Average earnings. The average earnings, including bonuses, supposed to stay unchanged. The speed of increase supposed to stay unchanged at 4.5% as we had last month. How this number can be bigger or slower, bigger or smaller, can tell us the central bank in the United Kingdom and how they can act for the more rates cut. Right now, we're expecting a 25 basis point rates cut, and if that happen at the 4.5%. Will tell us at the same. But if this increased by 4.5% or 5.25%, then we can probably expect more rate cut as the inflation is already down and the labor and the economy somehow is fine. If the central bank's decision for the next rate cut will be depend too much on the labor market data, including especially the average earnings with the bonuses. In Germany, we want to see how the inflation is falling down. We can expect to see the inflation continues to fall by 0.1% in August, which means that the annual inflation is supposed to fall down to 1.9%. How it happened last in the last data published from the Eurozone. So generally the inflation numbers from the Eurozone economies and the Eurozone as a total economy shows that the inflation is falling down. That means we can expect the central bank we can expect the European Central Bank to cut the rates by 25 basis points on its Thursday meeting, where we can expect to see the deposit rates at 3.5%, 3.50%, down from 3.75%. As the market already expecting to see that inflation, to rate 25 basis point rate cut, the focus will mostly be on ECB's economic outlook and their expectation from the economy for the next month. Also, any signal that what they're going to do in the next meeting, will they cut the interest rates by another 2 more 25 basis point, or they will cut it more with a bigger number? That will be the question that the investors and the traders will be looking after that. But if we not see the surprise from the meeting, but that we can see only 25 basis point rate cut, and while they're expecting another 25 basis point, 2 times rate cut, but each time by 25 basis point, that will put the euro under pressure against its rivals, especially as US dollar and the Japanese yen. But generally, what we are expecting to see that the weaker, slowly a little bit weaker euro against this process. On other places, that's actually the most, yeah, and also we should not forget that on Friday we have Russian central bank meeting where we're expecting to see another rate hike from 18% to 19%. Last month we saw that the rate hike from 16% to 18%. Already after that rate hike, ruble fell a little bit increased against US dollar from each US dollar at 92 almost ruble fell to each US dollar again, the ruble to 87 against each US dollar. But now again it got weaker at around 90, 91. With this expectation, most probably 80. I mean, USD ruble will fall to 87 and will help the ruble to a little bit increase against US dollar, but it will not cannot last long because other data that we're expecting to see from the Russian economy is not such a brilliant data. Generally, that's what we're expecting to see the next week. We shouldn't forget that also that the next week we have the EIA report, the EIA monthly report, and the OPEC monthly report as well. Those data and also EIA, OPEC monthly report. We are expecting to see this in the next week, and we have to follow them carefully and see what they're expecting to see on the economy and generally in the energy market. Let's check the chart and see by this data that we had what we are expecting to see on the stock markets. As I told, this line, I mean, unlike that, we saw that there is a more chance for the rate cut, and it's supposed to help the economy to increase and the stock market to increase. As these numbers shows that the economy is more under pressure, and we have a more pressure on the economy, and there is a more risk in the economy, that can put the pressure on the stock markets. I mean, the more rate cut is because of the negative signal, and it's sending the negative signal, negative sentiments to investors. That will put the stock markets under pressure, which I mean, you could see that what happened after NFP numbers. Most probably we can see that trend can continue lower, especially under 5,400 on the S&P 500 chart. And for the for the US dollar, if we see the US dollar general trend is a downtrend. Still, we do not see any reason to say that okay, that can help the US dollar to increase a little bit, to increase more higher from these levels. But still, falling more also will be under question, as we have many reasons to have to see the cash outs in the stock markets, and also the higher risk and higher geopolitical and political risk in the market, which all of them will end with the more needs for the cash, and that more needs for the cash will support the US dollar and safe haven, and more cash will support the US dollar against its rivals, especially, so which means that US dollar index cannot fall too much, and we probably see the US dollar above 100 mark in these areas in the next weeks as well, before the central bank meeting on September 18th. As gold, this risks in the markets with the lower yields that we're expecting to see, both of them will support the gold price. Even thought the gold was not performing very well after recording the new highs, but still now it is waiting. Seems like it is waiting for any reason to get the advantage or take advantage of it and increase more. So the gold price is still in a general uptrend with the like side movement right now, and waiting for a stronger signal to go. So higher prices, there is a more chance for higher prices compared to falling. We have a very strong support for the gold at $2,470-$2,480, and falling under this can change the scenario. But as long as the gold is trading above this level, we can count more on a bullish trend. As for the oil, we could see that the weaker number that we had from economy in line with the slower tensions. So generally, they put the pressure on the oil market. Also, we are getting closer to end of the third quarter, which the production cut of the OPEC Plus is going to end. For the next meeting, if the OPEC Plus and OPEC and its allies, they confirm that they are not going to continue, they are going to continue to issue this production cut, and they are not going to increase the production at the end of the third quarter, and that will support the oil price. We know that as the market is getting closer to the end of this production cuts, somehow they ignored the falling in the U.S. inventories. We saw that the U.S. inventories fell more than 6 million barrels last week, but still the oil price also fell. So if we see any more real reason and more broader signs from ending, not ending and continuing this production cut, we can see the oil price higher. And also we should not forget that economic data that last week we had was not that disappointing as well. So now the most probably we can say that the oil price is not depend on the demand and the supply. It's generally the other reasons putting the pressure on the oil market. That's why that's why you can see even in the candlestick chart. If you can see, there's more candles, more small candles with no direction, with just like very small body. That shows that uncertainty in the market. This uncertainty in the market can cause a little bit price to support the price to increase before its next meeting. So before its next move. So before any movement, first of all, we need to see the prices above $72, and then we can see the next movements based on the market condition. But right now we're expecting to see the $72 in the next 2 to 3 days. On the cryptocurrency market, Bitcoin fell further as we saw that the outflow from the ETF markets, both from the Bitcoin and the Ethereum markets, that supported the general bearish trend that we had, falling the price under 57,000 US dollar. As we before implies on that the prices under 57 US dollar, 57,000 US dollar will open the doors for more for deeper numbers. Again, we say on the falling the price under $52,000 will open the door for 47,000 US dollar. If the price recover above 52,000 US dollar and can hold it on that, then we can expect it's 57 US dollar. But right now we are more counting our lower levels at 47,000 US dollar and downtrend for the Bitcoin. Just a general market condition and outlook. If you had any other question, don't hesitate please to write down in the comment section. I'll try to get back to you as soon as possible. Have a good week ahead. Bye.